Hi guys, Lee here. I want to walk you through this trade that I did today in the NASDAQ. Now, this trade is a little bit different to what I normally do because today I was placing orders in my brokerage account. Basically, place an order at a number, tell my broker to execute the trade, put a stop in and put a profit target in. And the reason I did that, because I got invited by one of our partner brokers called Trade Nation. They invited me to the Grove Hotel and Country Club. It's a fantastic golf course there. And I didn't want to turn it down, but I want to trade. I want to make money as a trader and I want to take advantage of the environment that we've got at the moment. The volatility is fantastic. So I'm going to walk you through this one particular trade that I did in the NASDAQ. So let's dive into the account and let's walk through the trade. Okay, so take a little look at the US Tech 100 trade that I did today. Entry at 19,290, exit 19,196. A couple of other trades I put on this morning didn't make much money either, but you can see his position sizing was lower as well because I'm not on my screens managing the trades as much, but made over £500 being on the golf course, and that is the way and why I love trading. It's fantastic, and you can do this, still make money and be playing golf. It's great. But let's walk through the reason why I took the trade in the first place. Okay, so I'm going to look at the 4-hour chart and I'm going to just show you what I was doing here. Now, we'd had this incredible move higher sort of yesterday and a huge reversal. Now, the storyteller indicator was coming up with momentum. We had this sort of higher lows. We were getting pro-trend system buys and this big candlestick here. Okay, now it's important that you understand that candlesticks are a certain size. They have a certain range. Okay, now look, most of these candlesticks are actually small to medium size. There's actually one candlestick that's quite long here, and there's one candlestick up that's quite long. Oh, there's another one here that's quite long. Now what happens, okay, and this is page 1 in technical analysis, support and resistance. And now in this case we want to talk about resistance and price reversal. So when price comes from a long way to a resistance area, i.e. this green candlestick, it takes up a lot of energy, a lot of buyers to get that candlestick pushing higher. Now this morning I'm going to open this up a little bit so I can show you. Now this green line is where I entered the trade, but I want you to sort of just look back over here. See that green line there? See that one? That one? That one? That one? That one? Well, these are our hot zones. They're called resistance. So if I just put a sort of a bit of a column around and match it up with those lines, you can see that there's a band of resistance here. Okay, now they were once supports, but now they became resistance. So they were supporting price. There was a reason price literally bounced off those areas, and then we turned from down below and rallied up to these lines, which are now resistance areas. Okay, so we're into resistance lines. There's 7 of those lines there. You could just draw horizontal resistance. I like to take my support and resistance from the wicks, guys, of the candlesticks. All right, it's very important that you do that. So price took a lot of energy to get up there this morning or yesterday, and there's a few more candlesticks hovering around there this morning. So I thought we were in need of a pullback, a retracement. Now, not only was it these resistance lines here, but there was also another resistance area, and it was with my resistance tool, the Fibonacci retracement. Okay, so I took it from there all the way down to this area here. Now underneath, let's move that column of resistance. Underneath there's a Fibonacci ratio number. There's 76.4%. So I want to look at that number, a percentage fib retracement here, because I use that fib retracement, guys, percentage. I don't use the default one. This one is absolutely perfect. So we've got plenty of resistance. I've got a fib resistance. I've got a candlestick that's tired. It needs to rest. I've got a storyteller indicator down here that's relatively high. and you can see it on a 1 hour time frame much easier. You can see how high it was. It's telling me that the market is overbought. Now, I entered the trade at 19,290. Let's just check on the account again. 19,290, and that was just with an order. Now, I thought, well, where could this market go? And so really what I was trading today was support and resistance. So I put an order to get out at this 19,200. It actually went below it. I got out at 19,196. Now at 19,200, this is really important because 19,200, what is it, guys? It is a round number. Price loves to bounce and fade and become resistance off round numbers. There's round numbers everywhere on a chart. And if you just, look at this round number here, 19,000. Look at the price go up to it, come down, up to it, and finally it breaks through it on the third attempt. So round numbers are very important indeed. Okay, now there's prices going up here as well right now as I'm doing this live, and you can see that I've got the divergence lines in here. Now there's a round number of 19,400. I bet it comes off of that area, okay, and I bet that acts as resistance for one candlestick, in this case a 1 hour candlestick. So the trade this morning was all based on resistance, which was once support, now become resistance. But there was these other little bits involved. The indicator at the bottom, the momentum indicator, overbought. The Fibonacci area, the fib retracement tool, giving us another area where price could come down. And to be honest with you, I only wanted to be in this trade for a short period of time. It wasn't a swing trade or a trade that I wanted to invest in. It was just an in and out trade. Okay, so with that, the stop was above the swing highs. I just was going for a 1-to-1 risk reward ratio, and it was a very decent trade, and it was all done while I wasn't at my screens watching the price action. And I suppose sometimes it's a lovely way to trade by placing orders and not being at the screens watching it. Placing orders in the morning or in the evening time may well, make you more money as a trader, because you might be a trader that you get out of trades too quickly because the emotion kicks in and it's getting the better of you. It might be that you become an order trader, okay? Now, the problem with an order trader is putting trades in your brokerage and then letting them place the trades for you. The problem with that is maybe when trades do go on a really big move that you're out of a trade and, you're flat the market and you've given up another 200 points where you could have, if you were sitting there managing the trade, you may well have trailed that stop and got out at a better price. But look, not being a slave to the market, sitting here as a trader, it's great making some money as well by just being on the golf course. And I think that this was my day today. I was at the golf course and I made some money. All right, it's a lovely way of trading. Okay, all right. Hope it helps. We'll definitely do some more trades, order trades, because I think not everyone can have the time to sit at their charts all day long and trade. Putting orders in the book, is a lovely way of trading. It's just knowing what strategies that you want to use around those orders. All right, so that's the walkthrough for today's trade, guys. And I didn't play that well playing golf as well. I had a pretty average round of golf, but it was made up with this nice profitable trade. Hope it helps, guys. Speak to you soon. Take care.